So the first thing that we're going to do is today we're going to learn how to record the journal entries. When we're recording journal entries, we need to know two things. What are the two things? Whether a transaction that has happened, is it a cash transaction or is it a credit transaction? This is the first thing that you have to determine whether there is involvement of cash or not. And if there is no involvement of cash, it becomes a credit transaction. What will you write? How do you distinguish that a transaction is a cash transaction or a credit transaction? Okay, so in cash transaction, amount is paid on the spot. In credit transaction, okay, so in a credit transaction, the amount will be paid on a later date, on a future date. So how will you know whether a transaction is a cash transaction or a credit transaction? There will be a mention of cash or check, or there is nothing mentioned. So that transaction will become a cash transaction where there is a mention of cash or check or there is nothing mentioned. How will you come to know that a transaction is a credit transaction? The name of the person will be given. So if the name of the person is given, there is a credit transaction. So I will sell the goods on credit to people who are called what? So we will sell the goods on credit to people who are called what? Trade receivables. And I will purchase the goods on credit to people who are called what? I will purchase the goods on credit to from people who are called trade payables. Trade payables are also called what? Suppliers. Okay. Trade receivables are also called what? Trade receivables are also called your customers. Okay, very well. So you know how to identify a transaction as a cash transaction or a credit transaction. So there are some transactions over here. You will tell me whether it is a cash transaction or a credit transaction. You write over here, okay, and tell me whether it is a cash transaction or credit transaction. It's a cash transaction. Read the transaction. Yeah. Hmm. 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 6,000 credit transaction. Why it is a credit transaction? Okay. Okay. So now you know whether a transaction is a cash transaction or a credit transaction. So at the first stage, initial stages till you are through, you should also try and analyze whether cash is coming in the business or cash is going out of the business. You should also analyze whether cash is coming in the business or cash is going out of the business. Why out? Why in? So owner is putting the cash into the business. So cash is coming in the business. So write in. Hmm. Electricity, cash is going out. Our first thinking point would, whenever we pass a journal entry, our first thinking point would always be from the point of view of cash or bank. First thinking point will always be from point of view of cash bank. If money is coming in the business, then what will you do? If cash or check, in place of bank, they will give you the word check. So if cash is coming in the business, then what will you do? Debit. If cash is coming in the business, then cash will be debited. If the check is coming, you are receiving a check. Okay, if it is coming in, then what will you do? Debit. Okay, so first thinking point is always cash or bank. If it is coming in the business, then cash or bank would be, then cash or bank would be debit. If money is going out of the business, then cash or bank would be credited. If money is coming in the business, then in the business, cash or bank debited, out of the business, cash or bank. Okay. If money is coming in the business, out, what? Okay, money is going out of the business, cash or bank. Either you will credit cash or bank. There would be one account that is involved, or both the accounts can also be involved if it is a credit transaction. Okay, are you with me? Okay, let's go to the journal entry rules. Now there are some things that is related to goods. Whenever the word goods come, whenever there is the word that is goods, transaction related to goods. So whenever the word goods are going to come, you are going to use only these four terminologies other than cash bank. Okay, what are these four terminologies? Purchases, sales, purchase return, sales return. Whenever the word goods come, you will use four terminologies. What are these four terminologies? Again, whenever the word goods come, you will use, okay, purchase of goods. When you're purchasing goods, what is it? Expense, that means it is which account? Real, personal or nominal? Nominal account. What is the golden rule of nominal account? So purchases will always be purchase return. Purchase return is what? Expense reduced. So if expense is debit, so expense reduced will be. So if expense reduced will be credit. Okay, fine. Other transaction that is related to goods is what? Sales is, income is which account? Nominal account. What is the golden rule of nominal account? So if it is income, sales income, so it will be, if sales is credit, then sales return will be debit. Very good. So transactions related to goods. What are the transaction that is related to goods? You will use these four words only if there is a specific mention of the word what? Goods. If there is anything else mentioned, that is purchase machinery, then will you use the word purchases? No, you will use the word machinery because that becomes an asset. So when they say word goods, that means it is purchased to sell. Very good. Now there are few important transactions where the goods are going out of your warehouse other than sales. Assumingly that whenever you buy the goods, the goods will go out of the godown for sales. This is normal. Okay, you buy, you sell, you buy, you sell. So goods are going out of the godown for sales. But there are four instances when your goods are going out of the godown, but it is not sales. So what are the reasons why the goods can go out of the godown? Maybe you purchase the goods and you're returning it. Then that means you're taking your goods at home, or you're distributing the goods free of cost, goods distributed as free samples, and goods lost by fire and theft. You've lost the goods because of fire and theft. So the journal entry for this, if you're returning the goods, if you're returning the goods are returned back. It is return outward, or I can say purchase return. Okay, the goods are going out. The journal entry for purchase return is trade payable. Say the journal entry. Again, the journal entry. Okay, again. Okay, what is the journal entry for drawings? What debit? That means the goods are going out of the godown for personal use. Okay, the goods are going out of the godown for what use? Personal use. Now your goods are going out of your godown for personal use. One account that is involved is drawings. Yeah, and which goods are going out? The goods that you had purchased. The goods that you purchased to resell, those goods are going out. That means your purchase is reducing. So that is the reason credit purchase. Okay, this is the reason why you're crediting purchases. It means that the goods that you purchase to resell, those goods are reducing. So you will credit the purchase. Come on, next one. Goods distributed as free samples. Which goods have you distributed as free samples? Now those goods are reducing, so purchase will be credited. Goods lost by fire and theft. Which goods have been lost by fire and theft? The ones that you wanted to resell, the ones that you purchased. So your purchases are reducing. Now what will be debited? If you've taken it at home, then drawings will be debited. If you are distributing, then goods distributed as free samples can be debited, or advertisement can be debited. If it's lost by fire and theft, then and purchases will be credited. These are four unusual journal entries where purchases are credited. Are you with me? Now let's go to the questions of journal entry. You will be given a transaction. Your first transaction over here is Mr. A started business with cash 5,000. What you have to do is you have to first analyze two accounts that is involved in this. What are the two accounts that is involved in this? Okay, so the first account that is involved is cash. Second account that is involved is capital. What is the rule for capital? C for capital, C for credit. I have always taught you by this rule. For capital and drawings, we will follow this rule. C for capital, C for credit. Capital account always has a credit balance, and I will never write rule for it. Okay? What about the cash? It comes in the business. not going in, it goes out and coming in the business. Cash account is a real account. What is the rule of the real account? The money is coming in the business, so it is debited. Next one. Okay. First two accounts involved. Purchases. When I'm buying the goods, it will be purchases. And the second account that is involved is cash. Okay, when I'm buying the goods, it is purchases. Second account involved is cash. Purchases, expense, debit. And when you're buying the goods, cash will go out. So this will be credit. Lovely. Next one. Two accounts involved. Okay. Sales and cash. Sales. Hmm. No. Sorry. Then my rent. Utility bills. Okay. Cash is going. Okay. Right, right. Utility bills is out. Utility bills is expense. Okay. What is the account for expenses? Nominal account. What is the golden rule for nominal account? So utility bill is an expense. So it is debited. And cash is going out. So it is okay. Next one. Deposited into the bank. So two accounts involved. Deposited into the bank. Cash is going out. Okay. Where is it coming in? So bank in. Hmm. Come on. It's a credit transaction. So the first part you will see. What is the first part? Bought goods. Yeah. What is the which account is purchases? Nominal account. What is the golden rule of nominal account? Okay. Debit all expenses and losses, credit all income and gain. Okay. Okay. Purchase is an expense, so debited. If purchase is debited, Mr. C credited. I'm not teaching you rules for personal account. Okay. Go to the next one. The so two accounts involved. Hmm. Okay. Which account is income account? Nominal account. What is the golden rule for nominal account? Okay, so sales income credit. What about Mr. C? So it will automatically be debited. Okay, next one. Computer is a non-current asset. Okay, computer is a non-current asset, so it's a real account. Right, real. What is the rule for real account? Real account. So computer is coming in or going out? Computer is coming in. Yeah. Okay. Yeah. So it's credit. Okay. So we are done with this one. Let's go to the next one. Do the transaction of February. Jan is done. So first, two accounts involved. Yeah. Then capital is always, so cash will be debit. Cash is coming in or going out. Speak a little louder. Two accounts involved. First, yeah. Okay. Paid. Which transaction are you on? Fifth. Okay, paid Mr. B. So two accounts that is involved. Cash will be involved. You're paying Mr. B. So if I'm paying Mr. B, is cash involved? So right, first account involved is cash. What is the next account involved? Mr. B. Okay, fine. Now think about cash coming in, going out. Okay, fine. Lovely. Next one. Cash is going out. Credit and cash is going in. Bank is going, yeah, it is coming in the bank. Okay, fine. Cash, why issued what? Underline. Issued what? Again, issued what? If the word check is there, which account you use? Check. Check is what? Which account you use when there is check? That's account that you will use is bank, right? Right. Other account that you will use is what? Rent. So you issued check. Issued check means what? You've given the check. Issued check means giving the check. So money is going out. Out means okay. Rent. Rent is which account? Real, personal, or nominal? Nominal. What is the rule of nominal? So I have given a check. That means I have paid a check. For what? Expense. That means rent is an expense. Remember always that you pay expenses and you receive income. Okay, go to the next one. By cash. Is the name of the person there? It's a cash transaction or a credit transaction? It's a credit transaction. That means Mr. E is going to be there. So one account involved is Mr. E. What is the other account involved? What is the rule for furniture? Real, personal, nominal. It's a non-current assets. Non-current asset means real, personal, nominal. Is it an expense, loss, income, or gain? Furniture is an expense. It is an asset, right? Asset means real account, right? Real. Okay. Any asset that you can touch, see, feel, it is a real account. You are going to use it in the business. Now, this asset is coming in or going out? In, because real account has what rule? So, furniture is coming in, real account, debit. Mr. E? Okay, go to the next one. Hmm. Hmm. Going out. What underline the word what you've done? You've received or you've given? When you're receiving money is coming in or going out. So bank will be huh? Okay, good. So two accounts that is involved is yes. Bank you will think what? If you're receiving, then how can it be an expense? Income. Remember, you receive income, you pay expenses. What you receive is income, what you pay is expenses. Since you're receiving, this will be an income. What is the rule for income? All incomes and gains are credited. Come on, now do the March one. Hmm. Sales, you talk about in or out. This is transactions related to goods. Income, transaction related to goods, purchase, expense, debit, sales, income, credit. Hmm. Hmm. Sold goods, received the check. Sales. Think from sales. Sales is what? Income. Income is what? Hmm. Coming in. It comes in, goes out. Yeah, lovely. Hmm. 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 Is going out. Hmm. In disciplines or drawings. No, no, no. It is withdrew from bank. That means removed from the bank. Yeah. 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 Yes. Yes. Hmm. Okay. Hmm. 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 Okay. Hmm. So we complete the basic journal entries that is there. What you have to do is you have to revise the golden rules. There are three accounts that is involved. Whenever there is a transaction, there will be two accounts involved, and the accounts would either fall in the category of a real account or it would be personal account or nominal account. We would always first try to think from these points. So real account is account of all the assets. It is applicable to all the assets like cash, land and building, plant, trademark, goodwill, patent, copyrights. Real account follows the rule debit what comes in, credit what goes out. Nominal account will be account of all your expenses, losses, incomes and gains like purchases, sales, purchase return, sales return, wages, salary, rent, utility bills and all those things. So nominal account, it is applicable to all expenses, losses, income and gain. And the golden rule for this is debit all expenses and losses and credit all income and gains. Now what I expect you to do is, I expect you to write, try these journal entries for question number 5, question number 6, question 7, and then ahead. Okay? Till question number 12.